The textile sector has been hard hit by GST. Also exports have not been doing very well. We're also on the anvil of festival season, and we're hoping that maybe things will look better for the textile sector from here on. Joining us on the phone line is a doyen from the sector, Sanjay Lalbhai, the chairman and managing director at Arvind. Good morning, Mr. Lalbhai. Thank you very much for joining us here at Bloomberg Queen. Let me start by asking you how you'd characterize the current environment for the textile industry, given that you've had some challenges in the face of GST, and exports as a whole, including textile exports, have not been doing very well.
The challenge is more because of compliance issues. If you are in the formal economy, then the people who've always operated in the formal economy and compliant economy are finding GST and they've welcomed it. If you were non-compliant, then there are challenges, of course. But as you would understand that there is no solution to that, they will have to fall in line. This is one of the most game-changing reform which has taken place. And we believe that long-term, people who are compliant, which are in formal economy, should do very well, because now it is a level playing field. And through excellence and through hard work, you could succeed. So yes, there would be challenges, because there was a substantial part of textile industry which was operating in the non-compliant zone. As far as exports are concerned, again, the working capital and the money getting blocked because of IGST refund issues, those have been addressed. So that was one of the major contention of small and medium scale exporters, and which was very valid. So we are very happy that the government has addressed that. The other major challenge which the industry is facing is because of the strong rupee. And we believe that a strong rupee is not only an issue with exports, but the entire Make in India proposition is likely to get challenged, because the imports have also become substantially cheap. There are two issues which have happened. There is a 7 to 8% appreciation of rupee, and there is a 6 to 7% depreciation of yuan in China. And China, being the factory to the world, is really a very competitive manufacturing hub for the world. And with this double kind of whammy, imports have become substantially cheap. So I think if you have to look at exports, more than anything else, the strong rupee is going to pose a challenge.
Mr. Lalbhai, could you give us an estimation of what kind of impact this would have had on your company's financials in the quarter that just got done?
We are doing pretty well on exports, and because we hedge our positions, in the short run, we are not likely to be impacted, because we would have taken a call last year on the currency. But going forward, we'll have to see as to whether all the other costs are also would moderate because of a strong rupee. See, the raw materials moderate because our cotton gets exported. The polyester and man-made fibers also get adjusted to the world prices. So when you have a strong currency, your input costs also go down. But they don't go down at the same level. So in the long run, it could be an issue. In the short run, it's not really posing a major challenge to us.
In the long run, how dramatically could it impact your margins, sir?
As I'm saying, very difficult to say, because our input costs would go down. We will try and we have we could work with product mix, customer mix to ensure that our margins are protected. But as you would appreciate, Minka, that it's very difficult to really figure out as to whether it will have an impact or not. We are again constantly, our foreign desk looks at rupee, and the forward premiums are 5 to 7%. And luckily, the rupee has depreciated a little bit in the last a month or so. So on the whole, with cotton prices moderating because of bumper crop globally, and the rupee adjusting a little bit and the forwards looking good, we're not as concerned as we were a month back.
What's the outlook on the demand front, sir? We're heading into festival season. It's been, sort of a difficult set of economic data to try and decode in terms of where the economy is. The consumer demand seems to be holding up. How are you looking at the festival season, the months to come, in terms of consumer demand and what that means for your brands?
Right. I think the demand is reasonably robust. It is a question of share of the wallet. So we have to closely see as to, with all the EMIs and the white goods and the electronics and the cars doing exceptionally well, what's happening to share of the wallet. But otherwise, as far as the demand for our category of products are concerned, all our brands is concerned, is pretty, as per our expectation. I wouldn't say it's a stellar kind of Diwali, because multiple forces have come into play. It's nothing to do with the demand or consumption, but it is something to do with the share of the wallet. And so GST and demonetization is, I think, behind. And that's not, I think, creating any kind of major hurdle in the kind of strong demand which the festival should have. It would be a question of share of the wallet. So these 2 weeks today is a great day, an important day. The next Saturday, Sunday is going to be very critical. But broadly, we are on course.
One last question, Mr. Lalbhai. Like you mentioned, some part of trade is probably formalized and is not really affected. But the other part, which is not yet formalized, and that is from where we are probably getting lots of complaints about compliance and all. Is it possible to quantify it in terms of what proportion of sales gets impacted, or what kind of loss has the industry suffered?
As you would appreciate, the informal economy was never part of any numbers, correct? So that's one of the biggest challenges our industry faces, as to there is an informal economy which was never recorded. Having said that, they have a huge opportunity because these are great entrepreneurs with great abilities. And if they were to get into the formal ecosystem, they would be able to work in the entire value chain and prosper. But it's just a question of changing the mindset and accepting finally that the means by which your business model is changing, and you need to adapt.
Mr. Lalbhai, you made a reference to some of the relief that the GST Council has offered exporters recently, or as of last Friday. But I think the proof of the pudding will be in the eating. They've said that they're going to expedite refunds, and it's only for merchant exporters that they've applied a 0.1% rate. So, do you expect that this relief, if the refunds come in on time, will be granted? But if not, will continue to be a sticky working capital issue for and is it impacting companies like yours, or is it mostly smaller traders or smaller exporters?
It would be the smaller people. Of course, it would impact us with our cost of carrying, or the refund is pretty small to the entire kind of cost structure. So it doesn't hurt us. We don't like working capital going up. So to that extent, it's an irritant, but it has no dramatic financial implications on our numbers or anything of that sort. But we are very confident that the government is taking into account all these issues and very quickly trying to resolve them. So we are very confident that these problems will be behind us. Even the inverted duty in polyester and man-made fibers, they've reduced the input duty from 16 to 12. So all the issues which have been raised by the industry have been broadly addressed. And I must say that the government is reasonably receptive on all these issues.
That's excellent to hear. One final question. What can you leave us with in terms of an update on several of your business plans? For instance, I know earlier in the year you were talking about the advanced materials division, and how that will grow out. New brands in the pipeline, new retail plans in the pipeline?
I think we are very buoyant on all these things. Our advanced material division is growing more than 30-40%. And it is EBITDA positive, and it's likely to become a reasonably important part of our textile business. We are going vertical, and we are becoming part of the supply chain to the 10 biggest retailers and brands in the world. So starting from the raw material all the way to garmenting, we are going completely vertical, and as a result, we'll become part of their value chain. So that we are very buoyant about. And as far as our brands and retail is concerned, I think more than the newer things, because as you know, we have quite a few initiatives in place. We want to now become dominant, profitable, and we want to, in every new businesses which we have started, because the mature brands are delivering stellar kind of numbers, but the newer initiatives always usually bleed and then they stabilize and then they give you the right EBITDAs. So now the whole objective is to get the whole portfolio to become equally profitable and grow it at a handsome 20-30% top line year in, year out. So that's the objective as far as the brands and retail format is concerned.
And how large is the AMD business now?
AMD would be touching around 700 crores.
All right.
And so at that rate, I mean, if we are growing at 30 to 50%, I mean, that's a handsome growth for a base which is not very large, but could become substantial in the coming years.
All right, Mr. Lalbhai, we'll leave it there. We appreciate you speaking with us this morning on Bloomberg Quint. Sanjay Lalbhai there saying the demand outlook not looking very bad in the onset of the festival season, and many of the GST related issues now getting sorted out with the government taking and the GST Council taking a proactive stand.